value comes in handy, right? Right on the flip of that time, like you said, right, with the time shift, right? Where are we? Right at the value area high, breaking down.
Yeah, failing.
Right at the time shift. So again, this is where the value and time is lining. So that alone for me is like, oh shit. You know what I'm saying? And then at that point, right, with that Thursday start, what do we get? We start to displace now. We gap down on the first 90, right? So we gap down through the previous gaps, and then you see we're going through all these high volume levels. We're just buttering through high volume levels.
Yeah, we're just gapping through.
You see what I'm saying? Which is pretty bearish. That's very bearish sign, because if we're gapping through a low volume level, right, that makes sense. You know what I'm saying? There's really no volume to catch that, right?
Yeah.
But if we're going through a previous high volume level and we're just melting through it, which now you can see the POC, right, from the previous, and is melting through. And this red line is the yearly POC. So pay attention to that yearly POC too. So this is your daily profile, but you know, watch that red line, the bigger line from the bigger value. You see what I'm saying? That we've been consistently trading inside of on a higher time frame, right? So this is the context, is what I'm saying. So first you have to understand the bigger context, and then, you know, now we're here looking at this thing, right? So now understanding that bigger context, and then now you're sitting here looking at this thing, right? So now you understand that we're failing the yearly, right, value area, back down right after that, you know, value area high, failing off the third six, boom. And then at this point, this is where the third 90 came, right, for a continuation. It gave you an open high. And then it gave you one more continuation short down, breaking the value area low. Again, time and value.
Yeah.
Just like up here, time and value, right? Again, right here, even in the middle continuation, you're getting time and value.
Yeah,
look at the POC.
Sweeping out the previous six low.
Exactly. And then look at the, now this is the thing, bro. Look
and
at the duration of the move.
This is where I caught the long position, right?
That's what I'm saying, right after that, right? But look at the duration of this whole down move, bro.
For the entirety
you tell me how long the duration is.
It's for the entirety of the 6.
Exactly.
8 a.m.
Exactly. It's precisely 6 hours that it gave you that shift, gave you the top tick, starting of the 6, gave you the bottom tick, exit, and a new long entry right off the music, bro. You can't make this shit up.
And I'm showing my screen, but this is exactly with the time shift, right? That whole 6 hours, right? We had that whole 6 hours from 8 a.m., which is where? Here. Boom.
And you guys can see, he caught that. He just kind of paper-handed it, but he really caught that bottom wick right there, right off that time shift.
Right here,
you feel me?
Right? Time shift, we get the new 2 p.m. And I was live on TikTok. We get the new open low, the big failure to gap down. We create our inverse fair value gap once we go here, right? Whether you want to look at it as inverse fair value gap, you want to look at it as higher low, whatever. We put in a low, we swept, we failed to get down, we put in a higher low, IFPG, breaker structure, right? Boom. Swept all the low resistance liquidity, and throughout the rest of the 6, and we're, continuing through this, we're continuing to pump. Right? 6
and then look,
to 6.
And then look, Jimmy. Now pay attention once again, okay? Just like what I just said, right? Watch this, bro. You'll be like, what the fuck now, okay? This is why I said just pay attention to the time now here, right? Once again, just like how this move was exactly 6 hours long, right?
Yeah.
Look at the long that you took, bro. Exactly 6 hours long. You see that?
Yeah.
This is why you have to understand time. And if you caught the open low of this 6 hour candle, you should understand to now target previous time-based high, which is obviously the third 90 high is your first target.
Yeah.
Right? Clear first target is your previous third 90 high, not random gaps, right? Not random highs. But again, your first target, again, off of time shift, will be a time-based high or a low or a gap that came from time shift. You see what I'm trying to say? So that's something.
You're not targeting random highs. It's if you're taking the trade off of the time shift, well, then you can base your liquidity, and the probability of it taking that high is so likely. Especially
and then you can boost it by being so precise, even knowing, I'm not just targeting this high or just random gap, I'm gonna precisely target the high of that third 90-minute candle.
And look at
You
how
see
it
the
started to
reaction
fall.
right off of that.
There's
Right
the
off of that third
pullback,
90-minute
right?
candle.
Exactly. And you got this big soak back down, right?
Yeah, exactly. So that was a good TP1 for sure, right? For that moment. Definitely. For, this is on the 23 minutes. So for the next, half an hour or 40 minutes, it went down.
Yeah.
Right after hitting your TP1. So that was definitely good TP1. So this is where you would TP1. And then now if you pay attention, by then, we're back inside of the value, giving you more confidence to hold it to your POC and your now next target of time, which is what? Your 6-hour high. Precisely here with the value area high together. So that's even more confluence, right? Your time-based liquidity is right with the value area high, bro. So that's even double confluence. Now, understanding this, you have successfully fully traded a whole profile outside of value to back inside of value. You see what I'm saying? With the time together, not just randomly trading down and up, but it has a whole logic behind the value and time. You can see what I'm saying, right?
Yeah.
It's all going, starting from the value, finishing to the value, coming back inside of the value to delivering to the value.
And it's so clear, whether you trade market structure, whether you trade ICT, SMC,
exactly, it doesn't matter.
It doesn't matter. If you pair time with your whatever fucking strategy you already use, you're good. Like I don't give a fuck what strategy anybody trades.
Like tell them, okay, just to give them a little context idea, for the past 2 months, you've been understanding and learning this time thing with me, and kind of give them a, your view on what that has done for you, or like in terms of like just improvement and what you're seeing differently, just overall. Well,
it's like
whether it's good or bad or whatever it is.
So here's the thing,
doesn't matter what it is.
Is like, okay, right, and I'll even go to my loss that I took today because I took 2 trades. I took a loss on Bitcoin and then I took a dub on Ethereum, right? But even the loss was time-based. And what, trading with time has allowed me to do is 1, be way more patient, and 2, and when I mean patient, I mean not sitting on the charts all day looking for trades all the time, right? But what it allows me to do is wait for these certain periods of time throughout the day, give myself a 10, 15-minute window, say, okay, boom, I'm either going to catch a solid, clear A+ textbook entry within this 10, 15-minute period, right, within these 90-minute opens, again, because that's where we're trading, is off of 90-minute opens and closes. Why? Because it's the fractal of the 6, right?
Yep.
But it allows me to also know, am I right or am I wrong? Because you'll know very quickly, is this going to be a continuation 90, which we clearly had? Or is this going to be a reversal, which, I was trying to catch, right? So let's break down the loss, right? What we had with this 90 at 12:30, obviously, we were selling off pre-market into market open. We continued to sell off from that 9:30 open. The 11 gave the continuation, right? So I was trying to catch the 12:30 reversal prior to that next 6, right? So what I saw was we had the liquidity sweep, right? The clear push below. We had the 12:30 open right here. We get the big open low, right? But there's no trades until you get either the big open high, right, and the failure and the continuation short, or the big open low. And again, from there, whether you go about looking to catch reversals,
that is such a good try though, for real. That is like a justified, like, even in my eyes, if I was there, I would have low key took it that, bro, and then just taken.
And why I cut it where I did, right? Because instead of taking full loss, I was obviously targeting 1 to 3, 1 to 2.5 at this internal high. Right, I ended up cutting the position on this candle, as you can see, and the reason for that.
You already knew that
we knew the fact
that if it wasn't reversing, it's going the other way.
Exactly.
So you wanted to cut
Here's
your
the
loss
time. If we weren't going to gap up from this current level, right? We have the time-based level, we have the time-based liquidity. If it's not going to gap up from there, take your loss, know you're wrong, and look, I was wrong.
Exactly.
And I saved myself from a world of pain, right? Yep. But then obviously we come back to Ethereum. And Ethereum was super, super clean. What did we have? Inventory was bearish for this entire 6 from market open until that next 6.
So that's 65% chance that we just even understanding the inventory, right? Behavior of the inventory.
Inventory went down 3%. Chance. We're down 3% chance on a 6-hour candle. And then all I waited for was that new 6 hour, right? Because where's the 6 hour open? 2 p.m.
Yep.
Boom. What did we do? Literally same exact model, same
Open
exact
low.
entry trigger that I waited for in the last time. What do we see, right? And I'll move this so you can see the fair value gap. We see fair value gap, right? I'll move this back so you can see 2 p.m. 2 p.m. does the open low, right? You can see that we're swinging here, right? We are failing to break below. We have a ton of trend line liquidity above.
Retest.
Also, previous lick retest. Liquidity gets swept.
Perfectly.
We retest it. We fail to gap below it with that.
Look at the
open.
Time and price lining perfectly
it's
right
so
there. Bro.
Perfect.
Look at that.
It's so perfect every time, and this is what
Bro,
is
so
it's actually so easy. And then
and
all I did,
you just need to really start to implement
motherfucker.
that.
We inverse it on this candle. We inverse it. We break structure. I enter with the inverse. Fuck a pullback because that's my entry model. And then obviously taking profit as we were pushing up into this gap. And if I knew better, and obviously this is where I'm still learning, but if I knew better, right, I would have known.
You would have just targeted the third 90 high.
I would have just targeted that third 90 high, knowing minimum 11.
Exactly.
What,
that's
11,
the time-based
20,
liquidity.
right here,
That's
boom.
the nearest time-based liquidity available, bro. You see what I'm saying? Those smaller highs and gaps are just
all this is
literally,
low
like you
resistance.
said, internal liquidity.
Yeah, all low
that's
resistance.
That's a time-based
internal.
liquidity. So that's different. You know what I'm saying? Those are just stagnant liquidity versus a shift of that key point of time to liquidity. That's the difference between a regular liquidity pool mapping and, my time shifted liquidity pool mapping.
Exactly.
You can get so precise even with the entry and have a clear target. Right? Clear
target. Motherfucker, and look at how we moved to that. Even with Iran news, even with war news, even Trump doing this, that, the third. Look at how
exactly, and we didn't care about that. We were just doing the same thing.
I'm just trading price and time. Fuck all the news.
Yeah, that's what I'm saying. Watching the time shift, we see that we're not gapping down. We're absorbing all those downside moves, making that higher low, right? And then we create those new bullish imbalances, creating, absorption to the other side, right? So now that's a clear sign that we're gonna have to take the reversal plus the oversold inventory. That gives us 65% chance of probability going the other direction, right?
And again, whether you enter with how I enter, which is a smart money point of view, or you enter how Jay enters, which is more a auction theory point of view, right? Or whether you enter off of supply and demand, how the masses
even
enter.
A trend line break here, bro. Look, even draw a trend line break. You could have taken
the trend line break
right there,
right?
and
break
the
the trend line and the retest, and you still get the retest, regardless of what entry trigger or model or ICT, SMC, this, that, the third. It doesn't fucking matter. If you can pair your liquidity with your time shift, understand where are we drawing to and where have we drawn from, it just is so simple. It's so fucking simple. There's no reason to pattern trade all day long because it's like, here's the thing. You trade outside of these 90-minute windows and you are the liquidity for the market. You are the liquidity needed for the smart money, for me, for Jay to step in at these 90-minute windows to take your money, right? So either you can trade with us, with the smart money, or you can continue to generate liquidity for the market for us to grab, right? Because at the end of the day, we're going to accumulate, we're going to manipulate, and then we're going to deliver. So what part do you want to be? Do you want to get caught in between, or do you want to wait for the smart money to step in and catch the move?
Exactly, bro. And you can see this is where I preach on the point of understanding time, because most people, like you said, know AMD, right?
Yeah.
But they pattern trade it.
Everybody knows that this is
time.
how the market moves. Accumulate, manipulate, deliver. Everybody knows that, right? But what they don't understand is AMDX. It's not just
open, low, high, close.
Right? It's not just AMD. That's not how the market moves.
Open, low, high, close.
Exactly.
Hence why we even use that full fractal that we use as 6 hours. Right, so it's a good thing that you started right there too. So for those that doesn't understand, right, it's basic math, guys. And the simple logic of what I teach as time, guys, is time. It's candle sequencing. Okay, meaning that open, high, low, close, which most people don't even know that it's up there.
Right, frankly. Open, high, low, close. It shows you exact price points. Exact price points.
Exactly. So these aren't just made up information that I'm giving you guys. This is called MGI. Okay, these are market generated informations that it's always gonna be there, whether you know it or whether you understand it, whether you don't understand it, whether you don't want to use it or not. It's gonna be there, right? Which is a functionality of each candle. Okay, and then again with each candle, draw it next to that. Draw next to that equal sign to that candle.
Draw what?
Draw like an equal next to that candle. Yeah, equal. That equals what? There's gonna be a timer behind each candle, right? Whether you're looking at the daily, whether you're looking at the weekly, whether you're looking at the monthly, right? That open, low, high, close is gonna hold a timer, correct?
Yeah. This could be.
And that timer, you're gonna have to fractalize it with the open, low, high, close.
Yes.
Hence why you get a 4 fractal. So this is not a random gimmick or anything like that. There's a whole study and reason behind why I teach people how to understand time. And once you can actually line yourself with that right there, what Jimmy's showing, then you're able to get in with that low of that candle with the time, not just pattern trading.
Here's how I see it. It's like if you're looking at this candle, right? Like you said, let's say this is a 6-hour candle, right? So we have this is a 6-hour candle, and within the 6, we're gonna do 4 things. Whether you like it or not, we're going to do either open, low, high, close, or open, high, low, close. Doesn't matter, right? And whether that's bullish or bearish, it has to be one of the two. Now, understand that 6, right, that time that we're looking at, if it's going to do 4 things, well, then you break it up into 4, right? So it's not just going to AMD, it's going to AMDX, meaning that if we get the open here, the open could accumulate. And then the low could be the manipulation, right? And then the high could be the expansion, right? And then we have the pullback, the retest, the whatever. And that's where we get the close, right? But you're going to see this sequence all within time, right? It's not going to randomly happen.
Not just price action going sideways, down, and up. If you guys do that, that's where, you might see, you thought that was manipulation, but you see another manipulation, right? And you're like scratching your head. I thought that was the manipulation.
Dude, the amount of times I see people get caught trading this, like, dude, I shorted it 4 times, but I just, I couldn't catch the move. Well, you're taking random ass fair value gaps. It's like,
that is not at the time.
That's not how this works.
Middle of the time.
The chart doesn't just move because we put in a gap and you think we're going to go down. Sorry. Like, it just doesn't. Sure, you can get lucky and catch random trades like this, right? Sweep, inverse, take short, boom, you caught your little push down, right? But you're not catching the bottom of a 6, right? And holding through. And obviously, I'm not holding through either. I still got to work on it.
With our logic, you can catch that bottom of the 6 and hold it. Like Jimmy, you seen my 5-day short from 74.4.
Bro, this motherfucker.
Let's go review that trade.
Yeah,
review that trade right quick.
You pull it up.
Right. Okay, so right quick, I'm gonna pull that up right quick for you guys. Okay, so we can review that big trade that I've given you, and I shared this on YouTube too before it even happened. Right, I made a whole review 2 weeks ago on Sunday right here. Right, on this candle, I made a whole review telling you guys, right, for week 3, I'm expecting open high on, now pay attention to the day, guys. Monday, Tuesday. What is that? Now, that's just the higher time frame fractal that I teach, not the 6-hour fractal, but the weekly fractal, right? So what's the weekly fractal? That's your Monday through Thursday. That's your weekly fractal. And then your Friday through Sunday is what? That's your weekend fractal for crypto. Okay, and most people don't know this. And that 7-day makes up 1 weekly candle, correct? And then understanding that, now, again, we're at the yearly value area high and we're starting the week opening high. Week is starting high.
Not good.
That's not good. You guys see an opposite example down here, right? Look at where the Monday, Tuesday is. Open, low, right? And we're starting at the low to set up for a weekly close high.
And again, whether you're looking at it like a support resistance, supply demand, or you're looking at value area, right? Regardless, right?
Exactly.
If you compare the time with whatever fucking theory you trade, you're good.
Exactly. right? But the point is, exactly, the point of this video is not the value. There's more to focus on the time, but right, just the time itself. So ignore the value even for this video. It's not necessary to understand. So on this teaching, so just ignore the value and just look at the time itself. Monday, Tuesday. So again, what is that? That's your Monday range, right? Monday range high, Monday range low. What happens comes to Tuesday?
Tuesday does the open high, the
open
manipulation.
High, and then it literally does open high, and then that's the weekly fractal Monday, Tuesday, which is your open high. And as it's doing an open high, it's doing a open high on that daily candle as well. So it's double open high.
And if you
look, it's weekly open high plus daily open high.
And if you look at the weekly candle, right, I'll go back to Jay's screen in a second, right? But he has the daily time frame pulled up. And if you look at the weekly, right, looking back at the example that he's currently looking at, that previous, right?
Exactly.
Look at that. The open high of the week, right? And obviously, this is how the weekly candle closed. But what did we do? We swept that previous week. We swept that Monday. Boom. That weekly candle sold the fuck off.
And then, Jimmy, look, bro. This is what's going to kind of trip up your mind, too, again. But look, bro. That weekly candle, I was just going to show you guys that, too. But that's funny. Look at this weekly candle, bro. Look. This is where it's like, damn, everything really is fractal. This is when you realize shit's really fractal. Because now, just like how we trade a third six, right? Pay attention what this week was, bro. That's week 1, monthly open, week 2, week 3. So you just seen a fractal monthly open high on top of a fractal weekly open high. Do you see how fractal that shit is? That was a whole week. Look, just like a Monday range open high, right? Monday, Tuesday. Look, bro, we have a week 1 range. Right, that's the week 1 range high. You see this? This is precisely. We didn't just randomly fill this gap. Okay, most people probably think we just fill this gap, right? But what I'm seeing is not the gap, right? I'm not really paying attention into this gap more so. I'm focused on this range of the month, bro. This is our monthly range. People don't know that. But why is that our monthly range? Exactly. Again, that's the monthly open. Right? So just like a weekly open, just like a daily open, that's your week 1, which is very important. That sets up the tone for the month. Okay? And again, by me understanding that, I can tell you guys if week 3 sweeps this high, then I can already have a bearish idea of trading lower, right? Logically, think about it.
It's clear.
That's not good on the monthly.
It's clear. Oh, yeah, of course. Going into quarter 2, that's terrible. But it's clear, right? At least we know that crypto's fucked. At least we know that we're about to sell off crazy.
Exactly. And then, right, as we done that, right, week 3, and then what do? As we do the week 3, again, fractal again. Weekly open high. Just like monthly open high, we're doing weekly open high right into it. Right, so this is why I've taken that short going into that Wednesday candle open high right off of that higher low. 74.4 was my entry, and I already shared it with everybody so people know. And from that point, I told people that we're going to target the POC, which was right here, to the value area low, which we have successfully gotten already. Right, and then now we're going to repeat the same process all over again, right? But we have to do this understanding that now we're in week 4. Right, that was the week 1, that was the week 2, that's week 3, and now we're in week 4, right? And we're still pinned inside of this Monday range. So it's different from other week, okay? This is harder now, why? Because now, if you guys pay attention, we're trading in the middle of the range, okay? You guys see where we are? We're literally in the 0.5, right?
Yeah. I mean, literally just discounted range and rejecting.
Meaning this is a premium entry, right? And this is a discounted entry, but this is a middle of nowhere entry.
Yeah, you're
anything in here, exactly. Anything in here is low probability already.
Especially if you're looking to swing, right? The only way
it's 50-50, exactly. It's
higher probability
50,
is if we were doing the open low, right? Like Tuesday, right? If we sold off and either swept Monday low or the inverse, which is what we're seeing, which is looking like we're going to push up to the Monday high, get into that premium, right? And then we can catch our shorts.
Exactly. So if we get this today, then that will be the mega short back down, right? But if we somehow,
this is the same
if
trade.
we somehow don't do that and then comes down and maybe like sweep here and then make a higher low or something like that, that would also push it higher.
Yeah.
But it looks like we're about to sweep the high, though.
I agree.
Honestly, you know,
and mind you, this is the same play. Jay and I both have our own Discords, and this is the same play that we call out every fucking week. That not only we take, but our members take. So go look at it.
1,000%.
Go look at it.
1,000%. 1,000%. But yeah, bro, like this is the plan for the week, though, and you guys will see how what we're talking about after seeing this video and seeing how it plays out. Right, but either way, the whole point right here is that we're still pinned inside of this Monday range. We have not done jack shit, and we're in the middle of the range. So this is high probability. This is high probability. These are low probability trades. Anything that happens in here, right? Because again, these are all FOMO trades, right? We're not at a clear, level to trade at this point.
No, which is why we're sitting on the 1 minute, the 5 minute, and we're taking our scalps, our intraday trades, and taking profit and getting the fuck out.
Yep. Until we get a clear trade from, failing this gap plus this Monday range, or vice versa.
Exactly.
Then we will have a nice trade, right? Nice trade to trade down or nice trade to trade back up.
And the probability again of us trading back up is so low, especially with the war news going into Friday.
Look how this looks, bro.
We also have troops. We have troops being currently deployed in the Middle East. At the same time, we're also currently saying that we're in talks of peace and pausing the war for a month or some change, blah, 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 all Trump bullshit. But I think the real play will be shorts, and it'll happen after market open Friday, and then into quarter two, we see the big sell-off. Bitcoin dumps down to 50K, and that'll be that.
Look at this. So this is,
I mean, bro, Bitcoin just looks like we're going to fall off a cliff any day now. One of these days is going to be a massive Bitcoin sell.
Time shift is coming, bro. Yep. Like I'm telling you guys the same thing now on the bigger time frame, guys. Right? We just went over monthly, daily, weekly, all that.
Hold on, I'm finna end this video, and then I'm gonna start another one. But hey, that was a quick little 30-minute session with Jay on how we use time fractals on the lower time frame. And because a lot of you guys have been asking me, right?
Yes, sir.
And you don't see this out there on YouTube anywhere other than either his channel or, mine soon to come. But at the end of the day, pair your current entry model with time, and that's it.
But yeah. We'll make another one soon, bro.
Yes, sir.